Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode, we wanted to really just recap some of our second year in business as a podcast. I want to start off by saying thank you very much to all the listeners. We've had more than 65,000 streams of the podcast, which is fabulous, really exceeded our expectations. So thank you for your support. First and foremost, to all of the listeners. Thank you, secondly, to all the guests who come on to share your perspectives. And last, but certainly not least, thank you to all of the team, both here at Upstart and at Sweetfish Media that help us produce the podcast. I certainly couldn't do it without you guys, and it's been fantastic. I've certainly learned a lot from this year, so I figured we'd share a little bit about what we've seen on the podcast this year, what I've learned, and maybe share some of the themes of what we expect coming into 2023. So here you go. I want to start off with some of our most popular episodes during the holidays. You may hear a few of these, may have already heard a few of these replayed as we kind of work our way through the holidays. But our most popular episode of the year, drum roll please, was from Dave Gerard, the founder and CEO of Upstart. We talked through the history of Upstart, why access to credit matters, how we built the AI models here at Upstart, why we chose to partner with credit unions and banks. The second most popular episode was of Tony Hania from KeyBank. I thought this was a really interesting episode talking about strong technical infrastructure, the future of open banking. I think we called the episode Safe is Risky. So I thought that was a great kind of risk perspective on things. Number three, Tom Fonin talked about the steady adoption of AI and ML and banking benefits to serving the underserved markets. So I think that was a fun episode, Tom from Associated Bank. And then rounding out the top five, Raja from Plaid and Rich, who talked about BNPL with us. And so I thought having some fintechs in that top episodes was really interesting. You know, when we started the podcast, we really had a thesis around, interviewing, talking to banking executives, credit union executives about their experience in the industry and what we could share experiences and learn from what people in the field had tried and done. And I think we really expanded that this year to reach out to some fintechs, to reach out to infrastructure players and technology providers, and even some folks in the DeFi blockchain space to talk about what we're seeing in areas that are not directly from folks in this space, not directly from practitioners in the banking or credit union space, but from people I think who have really interesting perspectives. And it was really interesting for me. We were a little nervous about doing that. It was a little off what we had intended, and yet I think it worked really well. So something maybe we'll continue a little bit into next year. One of people's favorite parts of our podcast are the bold predictions at the end. And so I wanted to highlight a few that have played out and not played out the way maybe we thought. So if I go through some of my favorite, Tony from KeyBank, I said earlier, is one of our number 2 most listened to episode of the year, said that inflation would be a main characteristic of 2022. Tony, I think you win the prize for that. That's been pretty true. I think we've all been a little bit surprised by exactly what the macroeconomy had in store for us in 2022 and are kind of trying to find our way through what's coming in 2023. Kayla Selhorst from CME actually predicted that consumers will continue spending through the economic cycle. So we'll see. That one's kind of maintained, but we'll see if that retains its truth as we come to maybe a different part of the economic cycle than we've seen historically. There are two more bold predictions that I thought were worth highlighting that were related in a certain way. One was the idea of home ownership and car ownership changing, particularly moving to things like unowned assets, fees for owning assets, something more like a subscription model. It was Michael Hostetler from Crane Credit Union who said that. And then Nicole Matthews from the Carolinas Telco Credit Union suggested Amazon was going to start selling cars. And I don't know if we have yet enough time to judge the prescience and accuracy of either of those two specific predictions. But I do think 2022 saw a fascinating shift in the auto market in ways that were somewhat unexpected, where we ended up with a big shift in the way cars are bought and sold. I think we see more changes on the horizon as we look at what the future of EVs are, what the future of direct-to-consumer models are. So I think there's lots of interesting things coming in that space. So those bold predictions, I think, are most of these about always looking for 1 year. So some of these have a few years to play out. But I think the theme around shifts in the underlying infrastructure and just general structure of the auto market and the auto, both not just the auto lending market, but the auto retail purchase process, I think is a really interesting trend and thing that will be impacting lenders for years to come. And so I think those are key, interesting themes from the bold predictions. But if I just look over the overall guests and conversations I've had, one of my favorite parts about doing the podcast is how much I can learn from practitioners, learn from others in the field. And I find I used to be nervous about doing these interviews because I needed to be super prepared and wanted to be ready for what would come up. And I found that in many ways coming in, I won't say unprepared, that would sound wrong, but really more curious to learn from people and following the conversation where the interesting topics take us has been a lot of fun for me. And so I learn a lot from all my guests. And I want to talk about a couple of things I think that were themes that came up throughout this year, topic areas that were recurrent that I think are really interesting. One, I think one idea that tough times are an opportunity to either to take advantage of market inefficiencies, of nervousness. I think the old Buffett quote, when everybody else is greedy, get nervous, and when everybody else is nervous, get greedy. And I think a lot of people are nervous right now. And I don't think that means we have to be greedy, but I think it means there's opportunity to differentiate, to serve an underserved customer. An interesting trend through the year, both through the podcast and just my conversations with industry executives, has been the growth in credit unions. It's been a big year for credit unions, and I think they have maintained lending, particularly to consumers, despite a difficult macro environment and a difficult interest rate environment. As of November, more than 6 million people became credit union members this year. It's the highest level of growth ever for growth of credit union membership. So we've got a lot of partners in the credit union space. We had a lot of guests from the credit union space. And I think that's interesting. And I think credit unions really have leaned into bringing both new kinds of products and new kinds of technologies to enable experiences in somewhat in an aggressive way. And I think that's really enabled them to lay the foundation for that ongoing growth and to be ready for what comes next. And I think that's, one of the trends that I heard from my guests was, hey, there are uncertain times right now, but this is a moment to invest in the future and to think about how we lay the foundation for what we want to have available and how we want to serve customers, not just today, but for the future. And I think those who are able to find the ways to invest and improve and drive better experiences for their customers and their members through these times will be the ones who come out really strong on the back end. A second set of topics that surprised me a little bit for how much people liked hearing about them was DeFi, crypto, blockchain. It's maybe a really interesting time to talk about this. I'm recording this episode while we're still trying to figure out what exactly happened at FTX, what the ripples of that will be across the crypto marketplace. But a number of guests pointed this out to me this year in the podcast. And one of my favorite technology analysts, Ben Thompson, who writes Stratechery, kind of a daily newsletter, has a point of view that, in many ways, cryptocurrencies are a distraction from the real power of blockchain. And I think maybe as cryptocurrencies struggle in terms of valuation, in terms of some of the centralization that happened around the on-ramps and off-ramps into crypto and DeFi, this idea of what are the product experiences that can be uniquely enabled by the concept of the blockchain is still really relevant. And I'm somewhat optimistic that going into next year, we will see some real iteration around what's possible with the blockchain, about new and innovative things being built on top of the blockchain. And the first wave of innovation for any new technology is almost always do the old thing in a new way. But the most interesting wave is almost always what's a new kind of product or capability or offering that's only possible in the context of the new technology. And I think that's what we have yet to really see in blockchain, what we're waiting for to hit the market. But I think what a lot of my credit union and banking executives were asking to understand and are keeping their eye out for. So maybe for 2023, we'll see some of those things emerge. But certainly was interesting to me, given how little business impact blockchain and crypto has really had on the core banking industry to date, how much interest there was in understanding that technology. The other area that I think probably felt that way to everyone in 2022, and I think will continue to in 2023, was artificial intelligence. That was obviously a topic near and dear to my heart, to the heart of all of us here at Upstart. But also, I think even in just the last few weeks, really an explosion of interest in the opportunity and capability of general AI. In particular, I think two technologies came out that tell us really interesting things about how these technologies will play out. And those were the two product offerings, really. Chat GPT. If you haven't tried it, it's at chat. I think it's chat.openai.com. But you can now chat with the AI bot who will respond to you and answer questions. And it's interesting to me that people are really having fun time. I mean, everybody's worried about homework and the high school essay and being totally written because it can write some pretty convincing prose, although not always accurate. But it's really fascinating. And the rumors are that GPT-4, the underlying language model, is right around the corner and an order of magnitude more impressive and capable. So that was really interesting. And the other technology that came out in the space in the last few weeks that we've seen more and more about is the stable diffusion, which is this text to image generation capability. And it's really fascinating. There's a couple of ways you can use it, but you can go just give it a couple of words, a description, and it'll come up with images, paintings, and photorealism. And it's just unbelievable what the AI is generating. But the lesson I took from both of those, because they're really interesting, and I think they have a lot of things to teach us about how things may play out in the credit space and the banking space in general. So ChatGPT was this chat interface built on top of a large language model called GPT-3. And GPT-3 was almost 2 years old when ChatGPT came out. So it was not a new technology, but there was this gap between the capacity of the underlying language model and the interface that was placed on top of it, where when they put it in the concept of this chatbot, all of a sudden, a much broader community of people could interface with it. You didn't need a technical background. You didn't need to set up a development environment. You didn't need to have code running locally on your machine. You could just go to a website, type in some stuff, and see the impressive answers. And that was both a matter of an interface productization of the underlying technology in a way that was accessible to users, useful for them in different contexts. And also some fine tuning of that model where there's the core language model, but then the group spent a lot of time kind of refining the answers and kind of doing a training layer on top of the underlying language model that made it much more useful and insightful. And I think that's really an interesting element of what it takes for a new technology. I think of blockchain in much the way of a GPT-3, where it's an interesting underlying technology, but it needs the right vessel to come forward, the right context in which to be implemented, the right product in which to be used for most people to understand the capability and really interact with it and see the opportunity. And I think we're still in the early days of seeing that in AI and in blockchain. And Stable Diffusion was similar. You can download it's open source, so you can download the code. I tried to do it just yesterday, and I must have spent a couple hours trying to get all the right Python packages and all the Mac. My Mac is running the new Apple Silicon and not the Intel Silicon, and these packages don't work. And after a couple hours, I gave up. I couldn't get it running. But then an app came along called Lensa that made it possible to both use Stable Diffusion in the context of an iPhone app, but also to do something interesting, which is upload 10 to 20 photos of yourself and get avatars where you could get some, artistically drawn versions of yourself in different superhero mode and sci-fi mode and whatever different kind of themes that they had built. And that made the technology immediately useful, and it became the number one app in the App Store. And again, I think it's this really interesting element of the underlying technology advancing to a point, but then having to be packaged and distributed and made accessible to users in the right way. And I think that's a really interesting lesson for us all about what these new technologies are capable of. But then often the important part, and so many of my conversations were about, well, it's not the technology, it's how I deliver a customer experience. It's how I leverage that to enhance the capabilities of my team or provide more information at the right time, or to integrate experiences from different places. And so that not just investment in the core technology, but investment in how do I really turn that into the experience my user, my customer, my team member needs. I think it's a real lesson when you see what happened with ChatGPT or with Lensa in terms of taking an existing technology, new, but certainly not super new, and making it more accessible and interesting. I think it was really interesting lessons for us all to take away. We also had a lot of conversations on the podcast about specifically AI and the concept of responsible lending and fairness. I had on, Upstart's Chief Compliance Officer, Andy Delgado. I had Tom Fawnin from Associated Bank. We talked with him about how AI models enable greater opportunities to lend to underserved communities. And I think that's really a theme that ran through a lot of the people talking about AI, whether it was Natalia Artis from AUB or Nicole Elam from the National Bankers Association, or when I talked to Nat and Nicole both about the More Than Fair initiative, was this idea that what we're trying to do is not use the AI for the sake of AI or even for profitability in many ways, but just to actually be able to serve a community that's traditionally been underserved. And in the context of More Than Fair, to ask the question, how do we make sure that the mechanisms, the metrics we're using to guide policy discussions are incorporating not just fairness, which I'm not trying to diminish as an important metric, but inclusivity of access, of availability of things like credit as other critical principles and things we have to pursue, and how we think about maybe changing the way we think about those in the context of AI. So I think those two conversations I expect to be big next year. So maybe I'll just flip to, as I looked at 2023, what's coming down the pipe? What are we going to be doing? What's the interesting stuff for next year? I think those three themes are going to be continual, but maybe overarching them all will be, what's happening to the macro economy? How do we measure that? How do we think about moving from what I might call a risk-off environment for many lenders today, worried about the future of the credit environment, worried about losses, and move to a world where they are more confident about their ability to lend safely into their communities. I think we don't really know what that's going to be, and that question will be top of everyone's minds. We at Upstart are working hard on that. We actually kind of pre-announced in our latest earnings call what we call the Upstart Macro Index, so a measurement that actually isolates specifically the macro environment's impact on credit performance, and does that in a way that's not impacted by things like mix shift or changing credit policies or changing pricing strategies, but really can look at and isolate just the environment of the macroeconomic environment and what that impact is on losses in a portfolio. I think it's a really interesting development. So keep your eyes peeled for more on us on that front, because we're just at the early stages of talking about what we're trying to do there. But I think helping people at least get a better picture of how the economy is impacting lending portfolios is the first step to being able to respond to and deal with that. And we're going to be focused obviously on that through all of next year. I'm sure all of our conversations will have this thread of where is the economy at and what does that do for my current lending strategy. But then I want to really keep this podcast focused on the big trends and shifts that are going to impact the way we think about consumer experiences in banking moving forward, whether that's the shifting environment in auto, how we buy and sell cars, what's happening with OEMs and direct to consumer, and how that changes the way lenders will interact with financing of vehicles, the continued evolution of AI, its ability, I think, not only to do things in underwriting, which obviously is an area we've seen a lot of improvement and a lot of focus, but I think across the experience, from marketing to customer service interactions to automating processes to improving of internal operations, there's so much room for AI to impact us. I think there'll be a lot of conversations, and hopefully a year we go from a lot of ideas and pilots to a lot of deployments and real practice about how these things can impact the business. I think the discussion of blockchain, how blockchain is becoming real product and becoming underlying technology that can power really interesting and different products and experiences will be probably a theme for our guests in 2023. And then the last thing I'll say is, please reach out to us on LinkedIn, on Twitter. I'm on both. The company's on both. The podcast is on both. Reach out. Tell us what you think, what you'd like to hear about. My core goal, I tell all my guests this when we start the podcast, before we record, I give them a little spiel on what we try and do. And my goal is always that all of my listeners come away with some insight, a different perspective, a different way to think about something, an idea they could try, a lesson they could implement in their business, but a practical positive for their professional lives out of listening to the podcast. And please send us your advice on what those would be for you, what people we could talk to, topics we could cover, things you'd like to know more about or understand better, so we can find the right guests. We've got exciting guests lined up, again, following the credit union banking executives, some more fintech practitioners and people on the cutting edge of some of these technologies. I'm excited for where those things take us in the next year and the conversations we're going to have. I hope you all are excited for the conversations we'll be able to have next year as well. So let me just end this episode with a second round of thank you to everyone who listens to the podcast. I did not expect to have the kind of listenership we've gotten, and I really appreciate each and one of you tuning in and spending time with me each week. It always boggles my mind when I meet people like, oh, I listen to the podcast. I still kind of can't believe that people actually bother to listen to it, because it's just me talking to people, and So I appreciate all of you for downloading and listening. I appreciate all my guests. Thank you to you all for coming on. I know it can be nerve-wracking to agree to come on the microphone and the camera and not really know what you're going to be asked. But I think we all appreciate the honesty and the conversation. And I learn a lot, and I think the audience does as well. And finally, thank you to all the staff here, all the team members who help put this thing together. It certainly is me on the front lines, the face and the voice, but a lot of the work goes into it from our team, from Ali here on my team, from everyone here at Upstart who puts effort into this podcast, and then to our friends at Sweetfish Media who help us produce and make this thing sound good and make us sound smart. So thank you to everyone who puts this together. I hope you all have a wonderful holidays, and we'll see you in the new year with a whole bunch of new content and some great guests and conversations. So please enjoy the time off, some time with family, and we'll be back at it in the new year.